Hey everybody, it's the Crypto Sniper with you, talking about crypto and putting out a warning. Actually, things looking a bit grim. You know, if we've not been recording for a while, there's no real trading opportunities. It's the kind of trading environment that has been very poor for Bitcoin, and I don't believe that that's actually changed. And in fact, I think if there's any opportunities, it would have been to the short side. So let's look at a chart. One of the charts I'm showing is Bitcoin versus gold, and it's been my position that the value of Bitcoin in gold ounces, which actually hit a high somewhere around here. Let's have a look at it. High 37. That was a high 37. That was a high 37 ounces. That was a high of 41 ounces. So on the 1st of December, this is a monthly chart. On the 1st of December, you would have needed 41. So that's 2 tubes of 1 ounce coins, that's 40, and 1 on top to go and secure yourself. You would have handed over those physical coins, and you would have had put in a digital wallet that you would see a digit on a computer somewhere in a wallet, 1 Bitcoin. That was 41 gold ounces that was required. By the way, since Bitcoin got onto this basing ascending grind line, that's the red line, it has been since 2013 consistent grind line support, right? In other words, every time you came towards this line, you got backed off. In other words, Bitcoin started once again overperforming relative to gold. This whole story in crypto is, once we're on this level, and in fact it was already overperforming to gold before that level, you've never been below it. So the gradient of increase in how many gold coins you would have to bring additional is that red line for securing 1 Bitcoin. And that's continued up. You can see it didn't get anywhere close on that. This is obviously a log scale. This is a 13-year period that you've been above this grind line. This particular one, we drew it specifically from this point because technically it was after a big surge, and it's never breached it since. You can see around about 2023, bottom of the bear market, it still maintained support. However, the moves away have been less ecstatic. So if we look at this channel, you can see I've encased that with a little bit of that, and we put our usual splitter. You actually haven't been in the top half of the bungalow, if we can say that. Bungalows don't have top halves. You haven't been on the roof for quite some time. And in fact, the bear market took you through that. You had a bit of a grind there. There was your 64K Bitcoin. That was your 69K Bitcoin. However, the 69K Bitcoin, you hadn't advanced in gold terms, even though you had advanced in dollar terms. So there was already a little bit of a turning there. Since then, you've actually been in the lower half, and there's even a subsector where you've been in the bottom half of the half, the bottom quartile, if you like, without much time recently above, and even the 109. Now, so that's a little bit of framing in terms of Bitcoin versus gold. This is also a squeeze. This is a squeeze across the top. In short, where's the massive money flowing into? And actually, the very big money, which has taken gold past 20 trillion now in market cap, of central banks, bankers, super high net worth, billionaire classes, major hedge funds, it's not retail, is buying gold. And in fact, 1 kilo gold ounce, 1 kilo, I said ounce and kilos, I am a little bit dyslexic, aren't I? 1 kilogram of gold bars are actually in short supply. And right now we are about to lose what is a 13-year line. Okay, that's a concern for we're better than gold guys. Of course, there have been periods where Bitcoin has lost, but they've always been in an environment after major gains, of which only part of those gains have been returned. These are instances where that has occurred over here. However, if you were to take out this trend line, which has been in place for 13 years, there's an indication that the rate of increase of valuation of Bitcoin to gold is no longer being held at the current level and is looking to be less. That is a key point to drop for crypto friends to remember. Okay, let's take you to the Bitcoin charts themselves, because we've been looking at those as well. and this is what we've seen. So 109, we mentioned in previous videos, which hasn't been in a while, that the 108, the marginally higher high, is not a good outcome. It's not a good outcome for you to have made a marginally higher high. Of course, you then had essentially a very big left shoulder, a kind of head which is marginally higher, and then you had a very flat low volatility period that served as a right shoulder, a low right shoulder, and that led to a downside break. Let's just make sure we still got that correct. We want to put that at the top, pull that down and correct it down to there. That is your high point. That is the neckline that we've chosen at about 93k. It seems quite consistent that there was support in and around the 93k. Remember, a key level of support can often be just run, and rebutted, just run. A major hammer there, run, plunge, bought back up, a plunge, bought back up. And then you had this key event that was a selling event. So where would the target have been? Well, what do we do? Whoops, my drawing moved a little bit. Let's pull it back into shape there. So we will look at this. We say it's a daily time frame. We will daily stroke 12-hour, actually, I would say. Let's have a little look at that. Is it really daily? Yeah, it can kind of be. We can spread it out. Yeah, daily was acceptable. Let's stay with the daily time frame. We don't need obscure time frames like 12 hours or any of the others. That projection would come in here, and that was there. So we were booed and jeered when we suggested maybe there's a chance of a head and shoulder in the, that turned out, let's use a different color here. And that's where I had a drawing. That didn't materialize, incorrect, but we were accurate about the fact that there's a slowing in Bitcoin. So that one didn't occur. You can see the grind lines and the channels. They're no longer going up so strong, the loss of momentum. However, you went and made a marginally higher high, and we warned in the same video where we said even if it doesn't turn into a head and shoulder in the blue area, what's now just a left shoulder, you could extend and make a bigger pattern with a higher high, and that's in the end what occurred. That's in the end what occurred. So where are we today? Well, let's just get it. There's your right shoulder that was low. You had the break that occurred, and this constitutes what many people don't realize when you're talking about head and shoulders is these are reversal time frames for the time frame under review. That means on the daily time frame, you actually have a red light. You know, Formula One, all the green lights, super macro, big time frame, you know, quarterly, annually. Bitcoin is a bull, no argument. You know, on the monthly, Bitcoin's probably still a bull. We'll go and have a look at it, you know, yearly, quarterly, monthly. Our concern now is on the daily time frame, which is quite a large time frame. Bitcoin has had a performing reversal pattern and is therefore for the daily time frame on a red light. For the daily time frame. This is why people that have attempted to trade during this period have lost. I've seen lots of people on Twitter saying, yeah, I'm losing. This is why people that make predictions, sometimes like us, we tend to avoid predictions. We go scenarios. So we pointed to this being a possible scenario where that might have been a right shoulder and you would break. And we also highlighted, but it could also bounce and extend into a bigger pattern and still break later. That's in the end what occurred. So these are scenarios. We don't have anything that's super high probability. Otherwise we'd be shorting it or longing it. So we've stayed away. We're doing very well in gold. We're doing very well in silver. We're doing very well in other trades. So this broke and actually performed to target. So not only did you get a reversal in Bitcoin, you also got a performance to target. That is an endorsement of view. In other words, downside patterns, downside targets, making of the targets is a positive enforcement of the reversal hypothesis. In other words, it doesn't negate the bear. What tends to happen is you continue to make downside patterns and then one fails. And then you maybe extend and get a bigger pattern and it also fails. And then you start to get marginally lower lows, which is bottoming in the same way that marginally higher highs is topping out. So what we then got is we got a snapback rally to the neckline that then failed. We highlighted this in the community where we were talking it's looking weak for Bitcoin. There was a bit of a basing ascending grind line. We've got it in the dotted red there. And sure enough, you sold off down. but you did get a marginally lower low. So we said it's in between nowhere land. You've had a reversal structure. My apologies. I had the laptop on a bit of a stand there. How was the ceiling view up top there? Did you spot any spiders? Anyway, yeah, so the basing ascending grind line broke down, made a marginally lower low, which sometimes can be slightly positive in actual fact. I was more concerned for Bitcoin that it would come down here, not go as low as that, and set up another inverted HVF potentially for downside. So it was a little bit in nowhere land there. A marginally lower low, one single one on its own is not enough, I'm afraid, to call a swallow and a summer. But anyway, we then went into this weak grinding up. We'd channeled that. We'd pointed out that that is very flag-like, and that the overall move has largely been down with quite a bit of volatility. And that is that. So in essence, you have a bear pole in the most simplistic sense. So I would just say, where was your high? Roughly somewhere there. And you have a bear pole down into there with a lot of complexity, some volatility, a bit of news drops, etc. And then you have a flag. And we said, if that flag rolls, that's not going to be very, very positive. Now, at one point on X, make sure you're following us also on the Crypto Sniper, by the way, to get updates, because sometimes an observation is not enough for a YouTube channel recording, guys. So sometimes we make an observation only, but it's useful and it might have some insight. So we're going to drop from the daily into the 4 hourly to have a look at this. And we even said, in spite of this, into the community, in spite of this looking potentially optimistic on a very low time frame, which we were watching because it was in this channel, it's not a trustworthy time to be getting into crypto, even for a little bit of a rally and some strength. Everybody thinking, well, it's been a long time doing nothing. We've got to start doing something positive. Everybody wants to call a bottom and get involved to the long side. Most crypto traders are long-only traders. Did you know that? Better part of 97% of crypto traders are long-only traders. Shocking but true. So if you keep seeing, if you only have a hammer, then everything becomes a nut. And in this case, a bull nut. Don't be a bull nut. Don't be a wing nut. Don't be any kind of a nut. But anyway, particularly a bull nut on crypto when the market is showing you this. So that squeezy Japanese actually broke down and then had a grind line and broke down some more. And we have now surrendered the level we expected to break, which was marked in red, the basing ascending grind line of what was actually a flag. A flag was in play, and we have failed to really truly make the top side. That's our splitter. I won't draw it through there. You failed to make the top side like you did here, and here, and there, and there, and actually the bottom side has broken. You'd supported a couple of times along here. You can argue there was 2 places of support there, and you've eventually spilt. This is inherently bearish clearly for Bitcoin. So you've actually had a bearish flag that has broken its basing ascending grind line, what is a subcomponent of the flag-like structure. And you could see that roughly this winding up pattern to do that, when we look at it with the benefit of hind in sight, you can see there was a real squeeze there in the pink. That was setting up, going low volatility. It's a spiller. We've warned a few times, most of the risks are to the downside, and now we are saying 3 months till the demand destroying event is known. Literally. That's our quote. Where you've got the yield curve inversion is doing everything it should be. We're seeing the flattening out of the normalization of the curve, the reversion. We are waiting for the name for the economic crisis. So crypto, in my view, will not make new highs until it first makes new lows on a demand destroying event. This is something we've put forward many times, and we point you to the last bull market that requires money and funds to be created to pump crypto. In the CV19 events, you first fell to 4K on Bitcoin before you could get 64K on the subsequent reaction. And I'm here to tell you the subsequent reaction and the ability to raise debt has now been diminished by and is seen by the events of Doggy, Trump, and all the rate cuts, the seeking of peace in Ukraine, etc., etc. In short, America's spending, bottomless overdraft, and ability to do obscene numbers in QE has been curtailed. And most of the current affairs news that you are seeing with Elon, Trump cutting efficiency, all of this, they've suddenly discovered efficiency now that the money can't be papered over the cracks because there isn't the same amount of money anymore. So this is a bearish development for Bitcoin on the 4-hour time frame, and it is, as we've already mentioned, on the daily. So going back up to the daily, how far does it go? Well, once you've reversed and you've made the target of the head and shoulders, I have no mechanism to tell you how far it could go. You can look at areas where it's shown some degree of significant support. Don't forget, this was a breakout of a broadening structure over here. We were on this. We called that a continuation, a likely continuation pattern. People were very frustrated with the bull market then as well. But that time, it was actually a continuation structure. We even said to you, it's doing what gold did. Gold took 3 years going sideways, topping out just through the $2,000 mark before eventually getting a small wind up and breaking to the upside, and now already through 3K. So it broke the 2K level. We had an upside HVF on a small time frame. We said Bitcoin's going to do something similar. It did that. However, now we're getting the divergence in performance. Gold has cracked on and done this, ran the 3,000, continuing not far off the 3,100s. Bitcoin is floundering. That's why you're seeing it go from 41 ounces of gold to 27 at the moment. That's quite some drop. That's quite some drop, and it's showing you what the central banks are actually choosing as their reserve asset. They were insiders, the highest insiders of the game. And I should, if I were you, I would follow this very, very closely. Okay, so this is bearish. Could you come back to the level where you broke and maybe get a bit of support roughly here? We consider this the level, so that's around 68. That looks, many people will be looking at 68 and say, I can't see that happening. Bitcoin to the moon, it's a bull market, etc., etc. You could get worse. You could reverse all the way down to here into the base of the pattern where you last had support. It depends on how big the demand destroying event, the DDE, the destruction, the disinflation. I want to also highlight that this is occurring on a weak dollar. A weak dollar. What's happening? If I go across and show you, for example, in terms of the dollar's performance compared to, say, the euro, there is the chart. This is what the dollar's done against the euro. Euro USD. Up is bullish euro, down is bullish dollar. So you can see here there was a little bit of a channel or possibly a squeeze, depending on how you choose to frame it. And again, you have the euro inching forward. And if you have followed our The Market Sniper YouTube, you will know also that we have highlighted that rates are going to go up in Euroland as they rush to establish a military-industrial complex, given the recent events that America is saying and doing that they can't spend like they used to. What does that mean? It means that the Europeans are going to have to spend more, and their debt markets are reflecting that. Their rates go up. The one thing though, when the rates go up, the interest paid on deposits is higher, and actually the currency appreciates it. So appreciates. So you've had a dollar appreciation period after the debt collapse in America. The US T's had dropped immensely, 45%. We had a dollar firmness period on that level of debt collapse. You see, they don't both collapse, it's at the same time. It's a seesaw. We've shown these diagrams before. Check out our previous videos if you want to see that more diagrammatically. So debt collapse, currency actually gets a bit of a bid, the other side goes up, but overall you're devaluing. It's a pattern of devaluation of left foot, right foot, left foot, right foot further down. You get it? That's how it goes, where going up represents devaluation. You don't typically devalue both unless you're not a hegemon like the dollar and you're having a full-scale crisis. So think Argentina. The British had their pension crisis with Liz Truss. Both the currency and the debt went down. That is serious bankruptcy. That is a nation-state problem. In the end, the US gets there. But first you do it one at a time, like how you walk. You don't hop down the street, you pivot your weight from one foot onto the other. And that's how you weaken the currency and the debt and currency system. Remember, every USD is also a UST. See the pair as a T diagram. So when you devalue, you're devaluing the one half. So with that all said and explained, the euro is actually trading up and the dollar has actually been weak. But yes, those targets were made recently for our blue inverted head and shoulder. That's a W head with two small shoulders. Those targets were made, so you might chop a little bit, but overall the reversal is in favor of the euro with all the European rates. Here you can see the dollar strength period. That was an excuse for Bitcoin not to have done so well. Well, they're having to sail into headwinds. But right now, the King Fiat, which should be, when weak, supportive for gold, we're seeing gold going up, should be supportive for Bitcoin too. But for some reason, nobody's buying the Bitcoin. The insiders, the big money, is buying gold, everybody. That is the truth of the matter. And actually, all the ETFs have been set up, but despite supposed inflows, we're not seeing that in the Bitcoin price. And in fact, there's also been record outflows. So in the environment of a strengthening euro, I've often pointed out it's ironic, but you almost want the euro strong because you want dollar weakness. They are the two antagonists in the currency world, where the dollar represents King Fiat. When people don't want dollars, they'll put them in euros. If they're in the global trade game, you're a treasury department for a multinational corporation. And in the same way, that weakness typically is good for Bitcoin and good for gold. Well, it's turning out very good for gold. It's not turning out good for Bitcoin. And this is a key point we continually make. In short, the currency relationship and the environment should be such that Bitcoin is trading up. It is weakening on a weak dollar. That means it's doubly weakening. You could be in gold and doing a lot more, hence why I started with the original chart that I showed you. Okay, let's go towards XRP. So, by the way, we continue to state that there is a macro HVF. There will be people that don't understand time frames of analysis. We are also concerned for XRP right now. But the making of a 19.3 target to the upside would require quite likely some degree of QE and change in the world and all sorts of governmental support, etc., that we yet to have in the scale we need. So there's plenty of room for something that, and we called the top on this, by the way. If you follow this channel, we literally said 3.36 sell out. That's the candle you would have sold out at. That's the level. And 3.4 was the high. And since then, it hasn't made it any further. What gave us that opportunity to call the exact high by 4 cents on XRP? The fact that we have HVF method. You can be in a community utilizing HVF methods. See why we said 3.36 would be a localized high. How's that call looking now? That event that was related to XRP occurred on that day, which is the 16th of January. You're at the end of March. By the way, thank you for all the huge support. We've smashed through 50K. I want to say massive thank you to all of you who have helped us do that. That's truly appreciated, and you're awesome. Thank you for your comments as well and your engagement. We read them all, and we continually look to clear out spam and add filters whenever those are added. We want real people interacting in our comment section. So thank you for your real comments, and I have a few questions for you that I'll be posing for you in a minute. And I'm interested in your opinions. Some of you are smart. I'm interested in what the crowd thinks. I'm interested in what the individual thinks. So on the 16th of January, we called that high at 3.36 as an exit on the basis of an upside HVF. And it was quite a low slung one, so there was always that risk that it would be one of the last in a run. You then got a grind line there, you spilt quite hard. You have a larger grind over there, you spilt through that as well. You can see it there, and you came back to the $2. I've continued to assert the $2 is a very key level, and you've continued to get support at the $2 mark. Once up, twice up, and then of course the final high 3 times up, which gave us our HVF structure. You had this huge spike that was rejected and plunge protection bought. You then had the grinding along a very low vol on our line before the spiller that brought you here. Again, a hammer candle in that in and around that orange box bought. You had a super spike up that couldn't be held, some news to put some heat back in there, and all the way back down. You got bought again. That is kind of like a return move to the dotted red line after the break. You had quite a bit of choppiness here. There was a lot of talk about the reserve asset fund and political hogbenay and other chit chat, and then you went up. Now you are in quite a weak period. We've continued to position our community for defense. Our overall view has been a demand destroying event is needed and required and will take crypto lower before you get new highs. In short, the rinse repeat of CV19 looks to be in play. You're just waiting the name for the crisis. This seems to be on target, although we could be wrong. It's a scenario cast that we've put the highest probability and is our primary one. Other scenarios exist, and sudden changes in price behavior could see us swing the probability towards those other scenarios. But right now, it looks like XRP is selling off to the $2 level. Now, the thing that concerns me is you've supported a number of times, but each time you are not getting much better at getting away from it. This is known as a descending triangle structure, and the ability to get away is getting ever less. You can see how strong that rejection was there, how big that move was there, and how small the moves have become. What is actually happening is you're getting compressed and squeezed against a bid that has been supporting at $2. Now, if you get a nasty change in circumstances, such as we have a live trading day, by the way, for the first Friday of March, for unemployment, where unemployment could explode. Don't forget, we've got Doggy getting efficient, cutting wasteful jobs. I was listening, by the way, inside the government. I think I said they had 27 different CIOs because they're all working on non-communicative systems that don't interact with each other. There was something like 40 communications managers and everything. You need to watch that video itself. I've retweeted it under the Market Sniper about the inefficiencies in government and what those cuts will mean. By the way, Washington's homes sale levels are, the people looking to sell are twice as high as they have been. The prices have dropped 21%. There are certain areas of Florida where there are only for sale signs and there's not much buying activity, and they're already recording double-digit corrections in property. So the interest rates and the ability to borrow to buy is being pulled. Even though there is likelihood of further cuts and the rates are traded down, banks are not passing on all of that to the potential buyer, and they are turning away people on a far higher level. Why? Because the debt market has turned. Debt is no longer a sought after asset. The banks don't hold those assets often. They repackage them. It's called securitization, and they sell it as a sexy product for someone else to invest in. If those investors are going away because the TLT, the ETF for long-term debt, that is of the 20 to 30 year duration, has crashed 45%. There's much less demand for that. Add to that 9 trillion in rollovers thanks to Granny Yoda Yellen and the splurge spending Democrats from before that were hiring people into DEI jobs to mask the true unemployment, thereby saying it's not a recession on the basis of there's too many people that's being employed. Government jobs are not productive jobs. Anything that can be government should be made small. Government should be made to work hard for the salaries they earn. They are spending taxpayers' money. Unfortunately, that has not been the case under a splurge of administrations, particularly the last one that shortened the duration of debt and leaves Trump with 9 trillion to roll. That is where you're at. debt is not a very popular asset class. I could see this reaching 2, supporting at first, but possibly giving the weakest bounce of them all afterwards. And at some juncture, I think the data is going to be that bad that we're going to see downfalls in the crypto market, in spite of us still stating that a 19.35 to the upside will go. A new buying opportunity may be made. I personally don't like riding the downside, and all leverage longs were closed at 3.36. That turns out to being very close to selling the localized high for leverage longs. We also reduced investment consistently throughout this period and have been actually in defensive tether for most of what February, March has been. So I have very little to tell you. It is not a good trading environment, and it could be not even a good investment hold environment for unleveraged. In short, our community has been encouraged defensively on a non-advisory basis during this period by virtue of my own positioning. Okay, so with that happening, what could be the possible risk structure if we get to 20 and we bounce? I highlighted once before, we had a complexity in the left shoulder, which sees 3 impulses in the left shoulder, 1, 2, and 3. That gave us our up swinging move for the 3.36 call. We highlight too that you can get typically an asymmetry of behavior. So this was a tightening of complexity with 3 distinct impulses and loops. You can in fact get very much the same in the right shoulder, typically what occurs in one part of the fractal. This you're not going to get in any technical analysis book. This is someone of 30 to 35 years now experience. You can wish me happy birthday if you like. By the way, the big old day is coming. Don't even ask how many miles on the clock. I ain't going to be telling you. It's that kind of space. But let me just say the following. When you get complexity on the left, it's quite typical to get a symmetrical level of complexity to the right. So this means we had 3 interactions with the $2 and a roll away and return. You could, depending on your take on this one particular hammer, it's a bit of a wild card, argue you have already had 3 interactions potentially coming up here in a complex manner, with the middle one being the highest and the most recent one being the lowest, which is showing a fading of momentum. That could mean if bad news comes out, you could break as early as recently. However, that was such an acute hammer, the bodies, the candle bodies, were only down here. So maybe as one scenario you get another weak one, and we'll just be counting that as 1, that as 2, and some future weak bounce. I can't tell you exactly what the future holds, but there is a real risk that you get a downside break on XRP, despite us still being on the macro time frame long. So please process this. Something can be bearish on one time frame and because of macro structures, potentially very bullish on the other. The journey is never a straight line. We are doing analysis on the daily. It's actually the weekly and the monthly charts or the fortnightly charts for which we have given the $19 upside. So you could get a return move. Here's how it might look, and this is where I will finish with you. Don't forget, by the way, and I want to say another thank you, by the way. I've got a lot of gratitude to give today. It's not my usual self being so soft, but thank you so much for using the Simple FX link. Loads of you are signing up. You can use crypto. You can trade traditional markets and crypto markets with them, and it's awesome seeing that. And you get the exact same rates as I do. There is no change or any hit. They use their own marketing budget, and they give us a little bit of recognition. So it's a nice little bonus for us, and we appreciate you doing it. By the way, if any of you wanted to buy gold, you have Bullion Vault, Internet Gold, just start. Maybe it's not a bad idea. Let's say you're all in on crypto, and I'm a bit antagonistic sometimes to people that are all in. We had Michael Saylor say gold is a garbage investment. It's king commodity and it's garbage. All commodities are garbage. Technology means you just get a plethora of the commodities continually ever advancing. Well, actually, you run out of easy gains after a while. And if you've debased money so badly for so long, the commodities do in fact get a run before major technological leaps can come in to bring the prices down. So I'm afraid he's wrong. And in terms of gold, I'm afraid gold's currently outperforming. And by the way, I did show this chart. Maybe I should show this one to you too. By the way, if we show this chart over here, best asset commodity class that's been in existence since before 2000, Bitcoin is not one of those. Over the last 25 years, a quarter of a century of performance. Let me just highlight what I've also highlighted on the Market Sniper. Gold is, this is not a conclusive list, by the way, but it's all the major markets thought. Gold is number one, cacao is number two. Since 2020, what happened in 2020? A major spike in cacao, a major spike in Robusta coffee. Silver is sitting there at third. High-grade copper has even beaten the Nasdaq since 2000 till today. Difficult to believe, I know. It's not the Mag 7, it's the Nasdaq 100, and the S&P in purple is in 7th place, and our friends that love debt, the government, certainly in terms of issuing it, that's recently, since 2020, has lost an absolute fortune in value, was 100% up for the 25 years and is now down to 7% up. I expect that to go negative. And let's also be clear, there is no inflation adjustment for this. Think what your dollar bought you in 2000. How much was a beer for most of you? And how much is it today? By the way, that's the Dixie, and it is the worst performer. It's down 4.83% since 2000. So the dollar against even flawed other currencies, mostly the euro, the Swiss franc, the Japanese yen. Yes, the yen has lost value, but when you put them all together in the pound, actually the dollar's 5% down. So for dollar hegemonists, that's not a great performance. That black chart, minus 4.83. Look at gold around, and funny enough, it's even higher. It's almost 970 at the moment, 970%. Pretty decent performance. That's 10x, 10.7 times over 25 years. Okay, so I just thought I'd mention that as well. So what could be the downside? Well, at the moment, we're sitting at two possible options. This is a borderline between 117. We actually are, in terms of time frames, it could actually be a worse number. It depends on the scale of the capitulation. But at the moment, I would characterize it as 117. I'll update should it trigger on what the worser number would be. I'm not going to cover that here. If you want to find out how and why we do that, you can come into our community. Book a call below on the link. Costs absolutely nothing. We like to talk to everybody just to make sure no one has unrealistic expectations of what will happen. You can see we don't do a great deal when a chart is doing this, and there's real reasons why. Look at what it's done. Look at what it's done and what it's doing. How good is trading there? Everyone will say, well, but if you were smart, you would have been a buyer at $2 and a seller at, you know, somewhere at 210. By the time you recognize that, it's no longer doing it. This is a loss of momentum and a stall period, and we're going into a very bad economic environment. So that is why we've continued to talk, and people have said, oh, your talk of demand destroying, nothing happening. Those charts is telling you that post 2020 a lot is happening in terms of a demand destroying event. This is what's happening to your money. The inverse of this is what's happening to your money. Cacao, gold, silver, coffee, copper. This is since 2020. These are all the things. And you think all those things are going up. No, it's the buying power of your money through the debt debasement and fiat that go hand in hand. Every dollar that exists was borrowed into existence. There's a UST for every USD. Okay? There's debt markets. There's debt for every dollar. And everything since here has gone up immensely, except the debt markets that have crashed and the Dixie that has lost 5%. Everything else is up at varying degrees. Even the S&P is up, although not as much. The consumer is quite wrecked. The Nasdaq is up. You can see it there in 6th place. It did this since all that money was printed and proliferated. More of the money is finding its way now into gold in percentage terms than it is even into the Nasdaq 100. Okay, the status captured Mag 7, which are there for your surveillance society, probably have done better than the Nasdaq 100 still. However, that is a really captured bunch of mongrels funded by DARPA that are doing essentially the grid for tomorrow for your prison structure. So that's where we are in terms of your money and your buying power. This is a reset. It's already begun happening and it is going down. It's about to escalate because now you have a government that are cutting everything. If you're cutting everything, people lose jobs, they sell houses, prices go down, real estate people have to retire or resign or get a different job or a side hustle because they're not selling as many homes, there's too many sellers, there's not enough buyers, the banks aren't providing credit, the prices have to be a whole bunch lower, etc., etc. The deposits a whole bunch bigger, the rates that are paid a whole bunch higher. That forces the hyper valuation that we have seen in stock markets, retail homes, all the bubbles that have been pumped since Alan Greenspan and the liquidity experiments of all the subsequent Shlomo Bernanke, Yellen and Powell, all put together, sitting there, creating hyper valuation that is now in a contractionary phase because the debt market with the fiat is failing. That is what you are seeing. Real physical things go up. That is why they're trying to push you into digital things. Here is your digital market and its performance so far. I will trade in XRP again for that $19.35 on the technical basis that it can do that after it's pulled back again, but I am currently in and have been for an extended period defensive, as has our community. So be cautionary about this move right now. You could get one more and go, maybe even get a tiny one more, or it could fall as part of this. When you get a break, if you miss the break, you could be lucky enough to get a return move which will allow you out. If you wait for that and expect it, you probably won't. But this could see a 117 break. You could be knocking on the door of $1 whilst trading 210 today. That's over a 50% loss, and that could be worse. We'll update you on that, but you can find out earlier if you want by booking a call below. We'll see when and where we talk on crypto next. There's not too much positive out there. There could even be opportunities for shorts where targets are in existence. So bear this in mind. There's a lot of hot and speculative money in XRP that maybe doesn't have as much money in other places. Think retail guys hoping to be millionaires that haven't actually invested in gold, silver, bought homes, they put it on their credit cards. That could be flushed out very, very brutally in a downside sell-off. Okay, that's your update. Bitcoin XRP, why the clouds are forming. We have highlighted this before. It doesn't mean it actively happens, but this is a very concerning period. Plus, the economy is getting very weak. Retail is not largely engaged. To get them engaged, and even corporates and corporations are looking at headcounts, costs, and a whole bunch of things. What's going for the government under Doggy is going on in every household right now. Incomes are dropping. By the way, I saw a flash GDP number that saw the GDP expectation for growth instead of minus 1.8 is minus 2.8 potentially for quarter one of 2025. Minus 2.8, they're going to flush all the rubbish into that. That is a very, very steep contraction. The trade deficit of imports into America, man, oh man, I should probably find the Twitter just to show you that, points to a very serious issue for the US. Very serious issue for the US. I'm getting balloons. I think they're birthday balloons. Of course, I lied to social media, so you won't know the actual day because they don't deserve to have that information. But thank you, by the way, for all the follows. Check out our USD Korean 1 update, by the way, if you're interested in that. I want to find that US deficit chart. There's our gold. You can find it on the tweet. Here it comes. It's coming. It's coming. It's coming. It's coming. It's coming. Don't forget to follow us. Here it is. US trade deficit. My, oh my. Remember, live within your means. I did a video on the Market Sniper. The 3 rules that if you compound together will make you rich, regardless of the corruption in the system and everyone else cheating their way to money, the insider connections you don't have, how you can get wealth slowly, consistently. The 3 rules. One of them is live within your means. This is how America doesn't live within its means and why it is facing a debt-based crisis. What it sells offshore in the blue and what it spends onshore. Now you'll note that the money is heading down, which already warns you that that is not a strong economy. But the difference between the two lines is the main story. That is the largest difference between what you are buying offshore from China, from Europe, and what you are selling offshore. The difference. You are living beyond your means. That is called a trade deficit. That is called a trade deficit. And another crazy trade deficit, it is currently for February, if you annualized it, that means he's times it by 12, it's 1.77 trillion. Call it 1.8. The Jan-Feb deficit averages an annualized 1.8 trillion. That's like you making 100 grand salary and you're spending 180 grand over that 100 grand salary. You're living like a man on 280 grand when you earn 100, and it's all going on credit cards that you can't fund anymore. Emergency financial restrictions now in play for the US of A, and it's going to get harder on the consumer. That's why they've denied recession. You've probably been in recession since you first qualified, only they lied about that unemployment and added that new criteria. It's something to bear in mind in terms of crypto. Crypto can indeed go down. It is high beta and there is real concerns about what's going on. So with that all said and done, a cautionary tale on crypto. That's all the warning you'll get. We've been discussing this in the community for a lot longer. It's not been a story sufficient for a YouTube. We're putting it down to you now. There's some real risks that the $2 falls. If the $2 falls, by the way, you could be in a head and shoulders that will take you well down to the lower $1 and maybe even breaking the $1. If it doesn't fall, you could get a small bounce, you could get a medium-sized bounce. Were it to bounce robustly and let's say make a bigger impulse, then you are just in continual chop and contagion at this level. This has not formed a typical continuation pattern. It's formed an ascending, broadening structure. So if you were to go back up into this, even if you go up, it's not a great continuation structure. What you truly need, the only way you fix this to be something really bullish, let's assume scenario is wrong about demand destroying event, the only way you fix this would be a good strong second impulse and then a third one like that, and then this all becomes one big complicated one, and you do a squeeze and you go low volatility and break out to the upside. That would be one way you fix this if our primary scenario doesn't play out. I do still expect it like a small bounce. I just don't think you're going to get that. It's not my first choice. Such a strong bounce right now. Okay, so we've updated you on BTC, XRP, our take on the global economy, the expanding deficits, the huge debt rollovers. Everything is priced. All the risks are to the downside right now. There's no fresh money coming into the market. I would position, well, I have already. I'm not telling you anything to do, but I'm telling you where I'm at. And this is non-advisory. Okay, thanks for watching. Hit the like. Don't forget all the links below for booking a call. You can actually, and there may be an opportunity to make money on the downside. Yes, you'll all hate us. We'll end up being shorters, but there's big voids. There's an absence of bid stack, and it's all pure profit. When you gap down to the money made on collapses to the short side can be huge, and you can profit from these opportunities. But most people don't know how to short. You've got to have method. You've got to have a size stop loss. You've got to have an asymmetric reward to the downside to help you build wealth while everyone else is actually going in the wrong direction and is angry and upset. You could be super happy and building wealth. How about that? It's there for you. Click the link below, book the call. Till next time, thank you, and give us a like and a share. We appreciate how you've helped us grow this channel through the 50K level. Till next time, bye for now.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.